Hey everyone, I'm Justin Miller with the Chong Miller Group. At the Chong Miller Group, we help people buy and sell homes. We help people build wealth through real estate. And welcome to 2024. This is the January 2024 market update for Las Vegas resale single family homes. So this is our first update for 2024. Of course, we're looking at statistics, and so we're looking backwards in time. We're looking at the December 2023 statistics. And remember, every month as I do these market update videos, we look at comparative data as well. And so the month over month comparative data is going to be November 23 to December 23. And the year over year comparative data is going to be December 22 relative to December 23. What that means is this video is going to give us the full encapsulated view of what happened in real estate in the year 2023. So this is going to be really interesting, and normally I suggest you don't specifically need to be paying attention to the year-over-year numbers. They are interesting. They help parcel out seasonality, which we talked about in some of my prior videos. And instead, we want to pay attention to the month-over-month changes. However, in this video, because for practical purposes, it's the end of the year of 2023 comparative information, what we're really wanting to look at is how was 2023 as a year in real estate relative to the year 2022. And just as a slight bit of background, you'll remember 2019 was a pretty good year. The numbers were actually strong, and they had been coming up for most of the positive metrics relative to what we'd seen in the prior 3 or 4 years before that. 2020 was a very weird year because it started out strong, but then we had the closures imposed on us because of the pandemic. That closed the economy. We saw a big drop in sales in April of 2020, but then we saw sales coming back, and we started to see inventory shortages materializing in the marketplace in ways we'd really not seen in the Las Vegas Valley arguably ever. And that was pushing prices higher throughout the second half of 2020. That trend really accelerated in 2021 with continued low levels of inventory, very low interest rates because of what the Federal Reserve was doing to try to combat the closed economy effects from the pandemic response. And so that allowed real estate activity to really take off. And we saw very large numbers of transactions. We saw significantly escalating prices for real property. And we saw continued deterioration in inventory as sellers could not keep up with buyers. Well, in 2022, we started to see a little bit of an interesting change. We started to see an acceleration of inflation, and that caused the Federal Reserve to start increasing interest rates, and then increasing interest rates very quickly. So in the first half of 2022, before those interest rate impacts really started to occur, we saw a continued acceleration of appreciation. We saw a continuation of strong demand and low levels of supply. And that denoted the first half of 2022. The second half of 2022, on the other hand, we started to see significant impacts from those rapidly escalating interest rate hikes, and we started to see number of sales transactions really coming down. At the same time, we started to see inventory piling up in the market. Now, inventory never got super high. In fact, it came back to just about normal, where normal would be sort of that inventory that existed between 2015 and that current year, 2022. So inventory wasn't high, it wasn't low, it was about normal. But we also saw sales in the face of that inventory coming down significantly. And that caused us to see pricing come down. So we peaked for price in May of 2022. on single family resale residential here in the Las Vegas Valley at $480,000. We saw that come down and end 2022 with about a 12% drop in prices down to $415,000. Again, single family resale residential here in the Las Vegas Valley. Now, in 2023, we were subjected to continued increases in interest rates throughout really all of the year, continued really strong jawboning, aggressive statements from the Federal Reserve about how they're going to kill inflation and they're going to destroy whatever needs to be destroyed to get rid of inflation. They're going to continue to increase interest rates. They're going to continue to do anything necessary to pull down inflation. Their war on inflation was misguided. It was nonsensical. They continued to increase interest rates. And so through the first 3 quarters of 2023, we saw very significant increases in interest rates, which were driving down sales. And that driving down of sales numbers, interestingly, was not pushing inventory higher. And we're going to see that as we dive into the numbers in just a minute. But we saw sellers backing out of the market every bit as quickly as we saw buyers backing out of the market. And so inventory actually came down last year. We're seeing new on market coming down last year. And so we were depleting inventory even though sales were weak last year. Net effect, prices actually went up. So let's go ahead and dive into the numbers and see what literally took place. Now, these are the numbers published from the Multiple Listing Service, as well as a couple of other sources, for what took place in reality, what actually occurred for Las Vegas resale residential single family homes for the year 2023. Again, we're looking at the December 2023 numbers. We're looking at the whole year of 2023 numbers with this video. Now, let me preface by saying in late November of last year, 2023, I released my market forecast for what I believe we're going to see for 2024. Go look at that video if you've not already. You may want to go back and rewatch parts of that video if you've already watched it. I'm calling for significant changes in the marketplace. I'll highlight some of those right now. I'm going to highlight some of them again at the end of this video. I was just reading an interview that the new president of Las Vegas Realtors, that's our trade association here in Las Vegas Valley for real estate agents, I was reading her interview about what she's anticipating for 2024. It's quite different than what I'm anticipating. I've been reading the forecasts coming out from Zillow, from Goldman Sachs, from Redfin, etc., including the National Association of Realtors. Their forecasts are quite different than mine. In fact, some of their forecasts, I question how they've come up with the information. It seems to be a qualitative study instead of a quantitative study of what maybe is going on in the market. Well, if you look at my forecast for 2022, I was correct in what I forecast. If you look at 2021, you look at 2020, I was correct. Now, obviously in 2020, my forecast for that year did not include a pandemic. But the year still worked out according to what my forecast was. For 2023, I did not anticipate the Fed was going to be so destructive and so hell-bent on increasing interest rates at a faster pace than any time in the post-World War II era, and from a gap from the low level before they started to the high level at what seems like it's probably the end of the rate tightening cycle. Also unprecedented in the post-World War II era. Very, very aggressive. And so there are some parts of my forecast that I made last year for 2023, in 2022 for 2023, that I overestimated. I overestimated the number of transactions that would take place. But pricing, I was pretty spot on, contrary to what almost all of the other forecasters out there were saying at the time. Why? Because I bring PhD level knowledge of economics, PhD level knowledge of statistics, as well as PhD level knowledge of sociological forces in the environment to bear on the forecasts that I give you, as well as to interpret the market update videos. And so that's what you've got here when you're listening to me. And why do I give you this information? Because I want you to be better prepared to interact in this market if you want to or if you need to. Because the more information, the more accurate information that you have, the more accurate insight that you have, the better your probabilities are going to be of getting into a contract that you're happy with, getting through that contract, and actually having sold or bought a property that you're happy with. So again, I am Justin Miller, and this is the market update for January of 2024 for residential resale single family homes here in the Las Vegas Valley. Please smash the like button, subscribe if you've not already, share these videos with your friends and colleagues, your family members, anyone who you think might benefit from having accurate knowledge and understanding of what's going on in the market. Let's dive in with some numbers. So December of 2023 closed out with a median sale price. That means half the transactions took place above, half the transactions took place below. The median sale price for single family resale residential of $444,000. Since this is the first video of the year, I'll just repeat, I parcel out all of the new construction numbers that managed to make their way into the multiple listing service, because the new construction sales that take place are categorically different. New construction, there may be a builder that listed 27 units into the multiple listing service of the 300 that they sold. Well, why did they list those 27? And as a seller, they've got 27 times more power than most sellers out there who are selling an individual house. So the new construction properties are categorically different. They actually statistically look different. I pull them out. Most of the places you get data reports from are not, and so you're getting corrupted data just for that reason alone. So single family resale residential here in the Las Vegas Valley, $444,000. Now, that's an interesting number. It means that we closed 2023 at $444,000. It also creates the benchmark for where we started 2024. Now, if you go watch my market forecast video, you'll notice, or you have already noticed, and by the way, if you go watch that video, it's a bit long. There's chapter markers in there. So you can watch through the chapters that you deem are going to be important to you, especially if you're reviewing it, or get some popcorn or ice cream as you're watching it for the first time, because all the information in that video is important. I suggested at the end of 2024, we will see price appreciation of about 20%. So that means we're going to be going up about $88,000 in 2024, according to my forecast. Other forecasts range from small decreases in prices to significant decreases in prices, and some actually forecasting small increases in prices. Now, last year, how do we look for increase in price? Well, we increased from $415,000 at the beginning of the year. Now, kind of interesting, we bounced off the bottom at the end of 2022, beginning of 2023. So December 2022 ended at 415. January, we had a slight bounce. February, we're back to 415. And then we went up every single month for the remainder of 2023, even though interest rates were going higher. Now, the really interesting thing about that is that if we look at cost of carry for 2023, cost of carry actually increased over 20%. Now, what's cost of carry? Most people buy houses with mortgages. And so if you bought a house with a 90% loan to value mortgage, you put down 10%, you borrowed 90%. Your cost, your monthly payment on interest and principal, not HOA fees, not insurance, not taxes, just interest and principal, increased by over 20% last year. I'm thinking this year we're going to see interest going down, which instead of allowing banks to capture this 20% increase in payments, we're going to be seeing sellers capturing this increase in appreciation this year. Now, the actual price appreciated by 7.0% last year. It actually increased by 0.3% month over month from November to December. Interesting, normally the month over month comparisons, again, the year-end review at the end of December, beginning of January, the annual information is actually more interesting. And so that's primarily what I'm focusing on here. Now, I look at price in a different manner as well. It's not just simply the median, the middle house in the market, right? Which would be descriptive of the house of average size, the house of average number of bedrooms, the house of average size yard, the house of average age, etc. That's where we're going to expect to see that middle house up here. But we know that if half the houses actually are smaller or older or have fewer bedrooms or a smaller lot or something like that, and half are bigger, maybe fancier, etc., we know that there's a significant range in the market between the top and the bottom. So this next number helps us uncover what's going on within that range and how it compares to the median, to that middle point. And I do that by looking at price per foot. Price per foot ended December 2023 at $247 per foot. Now that was up 1.2% from November. Interestingly, November had come down slightly from 247 in October. So we bounced off the top there at the end of 2023. So 247. We are up from 230 at the beginning of 2023. So we're up 7.4% on a price per foot. Up 7.0% on median price. And what that means is overall, the market across the range, top to bottom, and at the median, we're all performing by the end of the year. There were differences some months, but all performing by the end of the year approximately the same. We were not seeing a real decrease in number of transactions in the lower end of the market because of high interest rates, nor were we seeing a whole big increase at the top end of the market from cash buyers or wealthy individuals moving here from wherever it might be that wealthy individuals were moving here from. We actually saw the overall state of the market pretty stable across the segments of the single family housing market. So up 7.0% on median price, up 7.4% on price per foot. Now, of course, these are statistics. These are not examples of individual properties. They're not anecdotes. These are statistics that describe the macro environment of all single-family home resales here in the Las Vegas Valley. Now, that sounds like good news. But remember, interest rates were going way up, and I'd already highlighted to you, foreshadowed to you, that this did have significant negative impacts in 2023. And the really negative impact was on number of sales, the number of transactions that took place. So in December, and we need to parcel this out because there's a couple negative things that influence sales specifically in December. One of them, seasonality, because we always get fewer sales in December, but sold 1,290 in December. This was actually up. It was up 1.6% from the 1,270 that sold in November. So this is a little bit counter-seasonal. Usually we see a drop-off in sales in November and December. This year we actually had stability. 20 extra houses closed on their sale in December than did in November. So a little bit unusual for us to see this. It's actually really good news. I will say interest rates were actually coming down throughout the month of December, which was really good. We had peaked in November. We had gotten 30-year mortgage interest rates looking at almost 8% at the end of October. And so we started to see some fairly substantial decreases in mortgage interest in December, and that's really good news. I'll talk more about that in just a second. Now, year over year, sold December of 2022, we only had 1,181 sales that actually closed. And that was a big drop from November of that year, as we would expect seasonally. However, it's not all good. The December 23 number, 1,290, that's actually the lowest number of closed transactions that we have seen in any month except December of 22, going all the way back to February 2008. So we've got to go back 15 years to see numbers that low for number of transactions that actually closed. So it's a shockingly low number. In fact, let's look at that number in a different way. Over the rolling 12-month period, that was 2023. So from January 1st through the December 31st, there were 20,251 resale single-family homes that closed in the Las Vegas Valley. That's the lowest 12-month rolling total, so the lowest cumulative yearly total sales since September of 2008. In September of 2008 was the very bottom of the global financial crisis, where it started here in a little early in 2006. It didn't end here until 2012, but by September of 2008, we had seen the financial crisis spread across the entire country. That's the point where we had lower number of sales than what we had in 2023. Very small volume of transactions relative to what we see in a normal year. And interestingly, 2021, just 2 years prior, record number of sales transactions in the Las Vegas Valley, the highest number that had ever been recorded here in the Las Vegas Valley. So we fell over a 2-year period from strongest sales ever to the weakest in 15 years, the weakest since the depths of the global financial crisis. The number of transactions has just fallen off a cliff here. And it's really significant and really consequential. Interestingly, though, we still saw prices go up. And by the way, that 7% increase in the price of the median sale in a typical year, and I've said this in numerous videos, in a typical year, we see growth of price appreciation of between 3 and 5% across the country. In Las Vegas, we have a market that's really based on growth because we're a dynamic growing economy, and we actually see typical year price increases, appreciation of 5 to 7%. We are right there in that typical year environment as related to price appreciation. Now, is that a significant number, 7.0% on the median price? It is. In fact, I want you to think about it this way. Not only is that within the band, the top of the normal band for price appreciation, but if we think about a simple law of finance, often referred to as the law of 72, if we take a rate of return and we divide that into the number 72, that tells us how long in years it's going to take us to double our money. Well, if we divide 72 by 7.0, we get just slightly over 10. So in 10 years, if we were to maintain 7.0 price appreciation, and that's the long-term average in Las Vegas, 5 to 7%, we would actually, at the end of 2033, in 10 years, after the end of 23, we wouldn't be looking at 444,000 on the median. We'd be looking at 888,000 on the median. We would have doubled our money in just 10 years. If you owned a home over that 10-year period of time, and you maintained that home so that you got in, it was an average home, and you sold it, it was still an average home, you would double your money. Right, a 7% return, much more than you get on your savings account, more than you get on your CD. It's more than you're getting in dividend payments from pretty high paying safe stocks in the New York Stock Exchange or the NASDAQ. It's actually a really great return with very low risk, right? And we've seen positive returns on housing in 2019, 2020, 2021, 2022, 2023. Housing investments are safe investments. We normally see average year, again, taking into account some years maybe go down a little bit, average year 5 to 7% return. And that's what we got last year, even with interest rates really going up aggressively, and even with number of transactions going down very considerably. Now, for those of you who've been waiting around, contrary to my advice, thinking you're going to find amazing deals in the foreclosure market because everything's going to hell in a handbasket because you heard it somewhere on YouTube from some influencer who doesn't know what they're talking about. They're just trying to get views. Well, I've got some interesting news for you. Foreclosure sales, closed sales, just like we saw in traditional sales, closed sales in December of 2023, 3. That's the number that actually took place. And that number, by the way, that's down from 7 that took place in November. So if you're waiting around to bank all sorts of amazing deals on foreclosures, it ain't happening. I just, want to throw that out there to encourage you to recognize that we're not entering a foreclosure crisis. There's nothing about this that looks like the great financial crisis of 2006 to 2012. This is a completely different market than what we had at that time. And if you're responding to this market with the fears of or the same kind of methods that you took in those years, you're going to just completely miss out. So foreclosures, not a real thing. Obviously, there are some people who end up in problematic situations and they may face the prospects of foreclosure. I feel for people who are in those situations, if you are or you know anyone who is in that kind of a situation, please have them reach out to me right away, because there are things we can do to get them all of their equity out of their property and make them avoid that foreclosure process and actually protect them. They're going to come out ahead. They're going to come out with something that allows them to move forward without any kind of negative impact on their credit if we can get them out of their house before that problem that they may be experiencing metastasizes into a foreclosure. We want to avoid that at all costs, and in the environment we are in now, we can avoid that almost 100% of the time. So please make sure you're not letting any of your friends or your family or your colleagues drift into such a highly problematic situation that they have no way out. Okay, now that's closed sales down very substantially, even though we were up year over year for December, and we were up month over month for November. The entirety of the year, that rolling 12-month number, really low, almost devastatingly low. Well, there's another way that we can look at demand interest in the market, and of course that's looking at pending sales, and that is buyer and seller get into a contract. So buyers are looking, they find a house they want, they negotiate an offer to a seller, and a seller accepts pending contract until it closes. So pending contracts in December of 2023, 1,372. A good piece of news, that's actually 82 contracts more than what closed in December. So that's encouraging. We might have a little bit of reserve that we're going to see increased sales in January just from that alone. This number is up 12.2% from the 1,223 that we saw become pending contracts in November. So that's encouraging growth. And again, remember, interest rates started coming down substantially in December. We're also up 12.7% from 1,217 that we saw in December of 2022. Now that all sounds good, but further caution here. The 1,372 is the lowest number of pending contracts we've seen for resale, single family, residential here in the Las Vegas Valley since December of 2007, with the exception of November and December of 2022 and November of 2023. So we're up substantially from December of 2022, November of 2023, but we are still at really low numbers on pending contracts as well. So those are our demand numbers. It makes it look like demand is really weak. And you could be forgiven for thinking that, but this is actually similar to what we saw in March, April, May of 2020. There is an exogenous force, a force outside of the housing market, which is pushing down apparent demand. There's latent demand, not visible, of a lot of people who want to be buying properties. They're hidden because interest rates are so high. They've been driven out of the market. It's a temporary phenomenon. We're going to see these buyers come back in. We're going to see demand increase, and that's going to materialize as more closed sales, more pending sales. Of course, buyers have to have inventory to look at in order to be able to put something in contract and actually close on a sale. This is a challenge to us because as much as interest rates hurt buyers in 2023, and clearly they did, we've seen inventory just collapsing throughout the year of 2023. We seem to see a little bit of turn with that in September and October of 2023, where inventory continued down, but at a much lower rate. So what happened in December? Homes for sale, single family resale, homes for sale, 3,664. That is down 20.6% from the 4,612 that we had seen in November. Of course, we do get a seasonal drop-off. December is almost always the very weakest number for inventory, just because most sellers do not want to be on the market during the holidays, and most buyers are not looking for property during the holidays. So some sellers pull out of the market, they delist their properties, and new entrants into the market tend to be very low. We'll look at new listings in just a second, but we're down 20.6%. This has been an entire year of downtrend in inventory in the Las Vegas market. In fact, we peaked in September of 2022 with 9,775 houses listed for sale. So we're down by 2/3 from that number. Well, what about year over year? We're down 52.6% from the 7,732 homes that were listed for sale, sitting in inventory, waiting for buyers at the end of December of 2022. Right, so we'd actually taken about 2,000 homes out of inventory between September and December of 2022. And so we're down, like I said, we're down 2/3 from what we were in September at the peak, when we were at about normal inventory, not high, but normal inventory, meaning inventory that would actually sustain sales for between 5 and 6 months here in the Las Vegas Valley. And we're down 52% year over year. We're down 20% month over month. This is the lowest inventory of single family resale homes that we've seen in the Las Vegas Valley since September of 2007, with the exception of just 3 months. All happened to be at the end of 2022. Inventory is really low. So obviously sales are really low, but inventory is is so low that a lot of buyers who are out there who would like to buy, they're not finding something that they actually would like to own. And so this is a really big challenge in the market. We need more inventory. If you're thinking about selling, hey, interest rates are coming down, makes your home more valuable. We can price your home better. We can get buyers in your home to make offers on your home. There are buyers out there. I mean, if you're looking to buy, your options are narrow. You want to make sure you're working with an agent who can get you into the best properties on which you stand the best chance of competing to get into the best contract possible. So again, make sure you're working with an agent, someone who actually knows what's going on in this market. So that's inventory. So let's look at new listings. And remember, new listings, that's sellers who are now deciding they want to sell their properties. So new listings of resale, single family homes here in the Las Vegas Valley. What's that number look like, right? We know inventory actually already listed down 20.6% month over month, down 52.6% year over year. Well, newly listed into the market in December of 2023, 1,354. That's down over 500. It's down from 1,877. It's down 27.9% from November of 2023. It's actually the lowest December number, and December is always the lowest number. It's the lowest number since December of 2007. On an annual basis, it's down 17.0% from the 1,632 that we saw newly entering into the market in December of 2022. Let's look at this number one other way because it's kind of interesting, and that is the rolling total of newly listed homes that came into the market for sale, for resale. Over the course of 2023, January 1st through December 31st, 27,003. That number is the lowest rolling 12-month total that we'd seen since October of 2007. So the number of potential sellers out there who are looking to list their home, that just dropped off the cliff precipitously, right? So not only is standing inventory really low, really incredibly low, down 2/3 from where we're at the peak, down 52% year over year. But the number of properties coming into the market for sale, we're looking at numbers that look like October of 2007. Very, very low level numbers. Now, that's going to have significant influence in the marketplace as we look through 2024. There's very little inventory in the face of increasing number of buyers, partly because demand is latent and it's sitting out there and it rematerializes, especially as interest rates go down. We're going to have supply shortages inducing price increases this year, as suggested in the late November release of my 2024 market forecast. Again, go familiarize yourself with the information in that. I provide to you not just the forecast, but the issues that are impacting the market. I provide to you the reasons for my forecast, the factors that are influencing what my forecast is, and the factors that create risk to the forecast, such that my forecast might be wrong. And you can make your own decisions about what's actually taking place here. Now, two more things I want to talk about before the end of this video. One is back on market. Back on market since mid-2020, actually since early 2020. We've been looking at very elevated numbers. We had 519 properties that went into contract, fall out of contract, and come back onto the market in December of 2023. That's 28.7% of all of the contracts that had been written. This remains double the normal 10 to 12% that we see in a healthy market. Very high levels. Make sure when you're talking to a real estate agent, you're asking about this this particular issue. Whether you're a buyer or a seller, if you're a seller, you want to know what's causing houses to drop out of contract because you want to protect yourself from them. You want to know why they believe it's happening. You want to know what they suggest to do about it to protect you as a seller. If you're a buyer, you want to understand what it is that's killing off these contracts, because you don't want to be wasting your time getting into a contract that then fails and you've got to start all over with that emotional disappointment, financial disappointment. You want to know the contracts you're getting into are stable, they're going to survive, you're going to get through them, and you're going to end up in a happier place at the end of the contract than what you were at the beginning of the contract. So let me just really quickly say something about interest rates. Interest rates have come down to a little below 6.5% on the 30-year mortgage. Two things. One, the federal funds rate, the policy rate that the Federal Reserve uses to influence the market, has not come down yet. The 10-year Treasury, which is influenced by market forces and by the federal funds rate set by the U.S. Fed, that's been fluctuating right around 4%. Well, when treasuries are at some particular number, 30-year fixed rate loans, that mortgage interest rate tends to be just about 2%, 196 basis points, just about 2% higher than the 10-year treasury. So that suggests we could actually see mortgage interest rates right now coming down to just about 6%, maybe 6.1%. Well, we probably won't see that immediately because, two, bond traders go on vacation like a lot of other people at the end of the year. And bond traders tend to return from vacation in January. And I suspect that some of that drop in mortgage interest rates is going to be given back during the course of January. We'll see mortgage interest rates float a little bit higher. There's nothing pressing mortgage interest rates to go higher. We're going to see them turn back down, but it may be the month of January we're going to see some bouncing on mortgage interest rates before we start to see a more steady set of mortgage interest rates happening in the second half of February and going forward through March and April, allowing buyers to make better plans about what's going on in the marketplace. Because when they enter into a contract, they know what the interest rate's going to be, and it's going to stay that way throughout the entirety of their contract. Also allowing sellers more confidence about what interest rates are going to be, because most of the time sellers on one property are buying another property and they're going to probably need to take a mortgage on that second property. And it's one thing to take out a mortgage to replace a 3% mortgage with a 6%. It's another thing to replace a 3% mortgage with something that's either well above 7 or in a highly fluctuating, volatile interest rate market where it's unknown what kind of interest rates that seller is going to be able to get once they've got the ability to go into contract on a new property. So that is the market update for January of 2024. Looking back at all of the data for 2023, prices at the median up 7.0%, inventory down very substantially, 52.7% on the year, sales down very substantially, although they happen to be up from December of 2022 and November of 2023. It's deceptive information. We're actually at the lowest rolling 12-month sales total as we ended 2023 that we've seen since September of 2008. From here, things are looking up. We've put in the baselines that we're going to use for starting of 2024 in our ongoing statistical analyses for this year. I'll see you as we go through this year, helping you get into contracts as a buyer or a seller. Please give me a call. We help people buy and sell homes. We help people build wealth through real estate. Make sure you're talking to a real estate agent who understands this market, knows what's going on. Please subscribe, smash the notification bell, comment anything you'd like, and reach out to us. We'd be happy to help you. Thank you.